Hey everyone, welcome to the first episode here on the DVCI YouTube channel. For today's topic, what I wanted to get into, I think, is one of the biggest questions or challenges that's facing a lot of small businesses, especially in the construction space right now. And that is, what is going on with commercial auto insurance rates? If you're like anybody else that we work with or anybody else in the construction space, I can almost guarantee that year after year for the last, 5-6 years, you've been seeing steady, consistent increases primarily on your auto line of business. And there's a number of factors that are driving this. So today what I want to cover, I want to first talk about what's leading to these rate increases. I also want to discuss some of the ways that you can maybe help relieve that and lower your overall insurance spend. And then a little bit of the risk management stuff that we can get into, as far as making sure you're positioning your business in the best way possible. So as far as what's happening in the commercial auto space that's leading to increased rates, the number one primary driver for it is that in general, people are just terrible at driving anymore. We have so many distractions on a daily basis, from people texting and driving, people doing their makeup and driving, you name it. People are not paying attention when they're on the road. There's 10 times more vehicles on the road now than there ever used to be as well, which doesn't help. But distracted driving, speeding, driving tired, all of these things factor into the overall cause, which is very simply that people are getting into more accidents. And when you couple that with the fact that replacing cars and repairing cars is becoming more expensive, ultimately all these things pile up and they lead to one result, and that is that insurance companies, at the rates they used to be charging for commercial auto, are no longer profitable. They're no longer making money on that line of business. And it kind of happened overnight, at least in the carrier's eyes. So they are starting, and have been for the last 5 years, to continue to try and take rate or deliver increases to their insureds year over year to try and become profitable again. It's important to make sure that you remember that insurance companies are also a business, right? So they are in it to make money, and when they do not, they have to take the specific measures necessary to try and accommodate for that, okay? So as rates continue to rise, all hope isn't lost. There are still some things that you can do as a business owner or that your employees can do to try and help lower your rates. And some of the things that we recommend or assist our clients with are, number one, MVR monitoring. So monitoring the motor vehicle records of your employees is extremely important because it gives you a better idea of who you're allowing to trust in your company vehicles, and making sure that you're not putting your business at risk by having somebody with a bad record behind the wheel. Okay, so that's number one thing that you can do that really stands out to underwriters that will make them look at your account more favorably. Okay, number two, and this is maybe the most important thing, there are so many businesses that have got this grandfathered idea that it's okay for them to still have $500 or $250 deductibles on their vehicles and on their fleet. There are no more, gone are the days of the $500 fender bender, the $1,000 fender bender. Today's vehicles have cameras and sensors in every square inch of them. And when an insurance company or an underwriter sees an account that says, hey, we have $250 or $500 deductibles, they get a better, or I guess a worse feeling that this is likely an account that's going to nickel and dime every single claim, and they're not willing to take on any risk themselves. So if there's one thing that you take away from this, it's to double check the deductibles that you have on your current program. Our recommendation for businesses with larger fleets in the construction space, especially if you have a heavier fleet, would be that your minimum deductible is $2,500, if not $5,000. And the last note I want to make on this is that in changing those deductibles, you will not see a black and white immediate savings on your insurance program, okay? You will see the difference over time. One, in how your account is looked at by insurance companies. Two, the result of when you have a claim and you come out of pocket for $2,500 instead of $250, it's going to have less of a negative impact on your loss history, okay? And so as far as the risk management pieces and what you can be doing, number one, it's so important to have a documented fleet safety program in place that you can share with your employees and with everybody involved in your business to make sure that you're doing what you can to protect your asset, and that is in the form of your vehicles, to make sure that the vehicles are safe, that your drivers are safe, whatever it may be. The next piece is having a well thought out, consistent safe driving program, whether that's quarterly safe driving meetings, annual meetings, whatever it may be, or even daily, weekly check-ins with your employees to make sure that they're being safe behind the wheel of a car is so important. And it will only prevent you from having claims. And in turn, the less claims you have, as you know, the less your premiums will go up. May still be impacted by external factors and what's going on in the market, like we discussed, but at least you're controlling everything that you can. Okay? So that's a quick overview as far as what's going on in the commercial auto space right now. Stay tuned. Be sure to like and subscribe to continue to stay up to date as far as what's going on in the insurance industry as it pertains to contractors.